Hello, YouTube. I hope that you guys are having a wonderful weekend. Well, on my side, my weekend is about to get started, right? We're looking at step index on an hourly time frame, and you can clearly see that I have got the direction wrong for our contrarian trade setup. Well, he's finally wrong, right? Well, guys, it does happen. You're not going to get the direction right all the time, even when the technicals are in your favor. Price decides that nope, you're not gonna get your price level that you're looking for. Hey, so it does happen once in a while, and this is it for me. So we're gonna go over as to what happened, and I'm going to relay some price action that you can spot to have a bias change if you see that you have some algorithmic price signatures that are not holding up in your favor. Then you can switch your bias and go the other direction. Now, this is the price action lecture that we are going to have about changing your bias. Did you know that you can make money while you are still wrong in the markets? Sounds unbelievable, right? Well, let's see what we can do with that belief system, right? So, yesterday, which was on a Thursday, I was anticipating that the hourly time frame, which is what we're looking at here, utilizing the 1 hour time frame, new day inefficiency. We know that when the new day begins, step index has this tendency of creating inefficiencies. So that new day inefficiency, we are seeing it on the 1 hour time frame. So 1 hour time frame, new day inefficiency was printed here, and we went lower to print the Wednesday's low. Now, after Wednesday's low, I had been bullish ever since. I've been screaming in your ear that we are going higher. But as you can see, price action tried to utilize the 1 hour time frame PDRA as a support right here. And I utilized the consequent enrichment to determine if we're going higher or lower. And I strictly said if we are above the 1 hour time frame, consequent enrichment fair value gap, then we are going higher. But unfortunately, price action had other plans. Well, it did not want to visit that 7,690 key level, which is the buy side liquidity pool. Obviously, it is visible. We have 1, 2, 3 times that the market has come back into that 7,690. So obviously, there is an interest up here in this price level. I want to see price action going above that key price level. But price action had other plans, right? So what happens if our contrarian trade setup does not work, meaning that price has no interest in reversing and going up? What really happens? Well, today I woke up around the 1 o'clock hour. This is the London session, by the way, right here on this candlestick, as price action was trading inside of that inefficiency. I woke up and I peeked at the marketplace. Now I'm utilizing the New York time zone, so you gotta be careful with that. So here is the 1 hour. So here is the London session. When I woke up, I took a peek in step index. I did not look at the chart. I was looking at my phone. I just looked at the price level, which is right here. The price axis, it was at 7,660, somewhere here at 7,660. And I took a peek at it. I looked at it and price was down here. Now, obviously in my mind, I know that we are below that 1 hour time frame fair value gap, the new day inefficiency. We are below it. Now, that price level gave me a whole lot of information. Since it is below the inefficiency itself, in my mind, without looking at the step index chart, I just looked at the price level and said that 1 hour time frame inefficiency is going to be utilized as a resistance. That's what I said in my mind. I know you guys don't believe me. Well, that's okay. That is okay. You won't believe me, of course, because you haven't seen me trade step index, like really trade it. All I've been doing so far is just give you guys some tiny bits of information. But you will see me trade step index on a live account probably later in the year. But for now, we are just going through some of these lessons. I just want to illustrate to you what step index tends to do, right? So I was utilizing the 1 hour time frame initially as a support to go higher. But what happens if that idea does not work? Well, we treat the very same key level as a resistance. So my initial bias was if price action is above the 1 hour time frame fair value gap constant enrichment, then we can anticipate price action going long. But unfortunately, price action does not want to get up there yet. So it went lower, disrespected the 1 hour time frame inefficiency, and then it utilized it as a resistance to go lower and attack the Wednesday's 22nd of July Southside liquidity. Isn't that interesting that we took out the Wednesday's low? I teach that price is a fractal. Any time frame model that you're looking at, maybe on the 1 minute time frame, it is a fractal. It happens also on the weekly time frame. It also happens on the daily, on the 1 hour, or even the 15 minutes time frame. It is a fractal. So you need to have that market efficiency paradigm in order to understand the model that you're looking at on any time frame. Remember, that's what I said, that I can trade step index or any other market in any time frame, like the daily. I have a daily perspective. I have key PD arrays, market structures that I use to view the daily time frame. I also have market structure on the 1 minute time frame, and I specifically said that each time frame has a personality that is associated with that particular time frame. Each time frame has its own characteristic. Now, the 1 hour time frame characteristic that we are looking at is the timed based inefficiencies that begin the day. Now, this is a highly sensitive key PD array because it is laced with time. It's highly sensitive. So if we are above this key PD array, then we anticipate price action going bullish, especially around this time of the month or the 20th price action. So what happens if we are below our inefficiency? Then we anticipate the market going lower. It's simple as that, right? So our PD arrays can be inversely used higher or lower. It just depends on the time that we are looking at the market. So this is what happens, guys. I do get it wrong sometimes, okay? How bad? Step index, we are going far with it, man. Just hold on. Let me teach you something here. Well, let's head over into the 1 minute time frame so that I can show you what happened with my trade yesterday on the Thursday. So let's head over into the 1 minute time frame. So, so I'm gonna unzoom a little bit and gonna see what happened yesterday. Remember that we were anticipating that price action is going to utilize the 1 hour time frame inefficiency as a support to go higher. Well, price action did go higher, but the momentum was short-lived, right? Price action had no interest in going into that 7,690. Well, the very same inefficiency that I had utilized, which is the PM session. PM session inefficiency, let us zoom into that and see what happened, right? So I was utilizing that inefficiency as a support since it is situated inside of the 1 hour time frame key PDRA. So the 1 minute time frame inefficiency, I looked at it as a support, and as soon as price tagged me in inside of the PM session fair value gap, it went lower just a little bit to touch the 1 hour time frame constant enrichment, and then it bolted higher. And I was targeting initially the 7,690, and as you can see, we never got that key level. So what do I teach about the PM session? Well, the PM session is late in the day. It's very, very late in the day. So not a whole lot of movement is to be expected in the PM session. So what do I teach about the PM session? Well, you should target 10 points. If you're going to trade step index, then you should target 10 points, beautiful people. 10 points looks like this, right there. That's what it looks like. It's very small, okay? You're not going to be holding trades for long periods of time. It may take 15 minutes, sometimes even less, okay? Sometimes even less. So that inefficiency, we utilized it to go higher. This is what I mean when I say that you can be profitable even when you are wrong. So if I'm entering down here on that PM session fair value gap, where am I taking profit? At that 10 points, right? 10 points takes me to the lunch highs at 12 a.m. And I specifically said on a Thursday that that lunch high is situated with the 10 a.m. buy side liquidity. And I said that is suspect. So there is your 10 points. Even when you're wrong, guys, you can make money. So price action went lower, broke the 1 hour time frame constant enrichment, and it started to utilize the PM session fair value gap as a resistance, right? You can clearly see that we respected that as a resistance, and then it went lower, right? So it happens, guys. So today when I woke up, price action was trading somewhere here at the 1 o'clock London session. And I had an idea as to what I will teach today, right? That 1 hour time frame inefficiency can be utilized as a resistance. So price action went all the way up. It cleared out this buy side liquidity pool right here, right? And it broke structure, went lower, created another market structure shift. Now look at this time here. What is it? Right here, it is the 6 a.m. 6 a.m. it is the New York session. New York session open. There it is. It's creating a high somewhere here in the lower quadrant of the 1 hour time frame inefficiency. Now, if we split that 1 hour time frame inefficiency into quadrants, taking it from the low to the high up there, we can clearly see that we have quadrant levels. Okay, so we have the 25% here, hitting that as a resistance and going lower. Where? The Wednesday's sell side liquidity pool, which is down here, right? This is Wednesday's price action. It's taking a bit of time to load, right? So that could have been a nice shorting opportunity. So this is the ideas that I would utilize if price action has proved me wrong in my contrarian trade setup. I would utilize the very same inefficiency that I looked at to go long, and I would inverse that particular model and go short to attack that Wednesday's sell liquidity pool. So our contrarian setup, guys, is not materializing as to how I thought it would. So when something like that happens, I usually stay out of the marketplace and do nothing. So this is that key level that we are looking at of Wednesday. It is a green level, and we know a green level is London session. So London session of Wednesday's price action, you can clearly see it's being utilized as a resistance in the PM session. So we can take beautiful shorting opportunities in the PM session to go lower once more time to attack that 7,635 level. Isn't that insane? So how would you anticipate that the market is going to go lower or continue going lower? Well, you would need time, which is the PM session. That's the session that I'm available for. So here is the PM session, 1:30, guys. Let's zoom in into our 1:30. We know that price action wants to go lower, right? So what can you do with the PM session? All right. So we're going to identify the 1:30, which is right here. Going forward, since the 1:30 opening range, where is the inefficiency that is so obvious? Okay. So we have these volume imbalance, another volume imbalance, another one here, another one here. But you can clearly see that we have this wick low and the wick high here, which creates an inefficiency. But since we have a volume imbalance, we take that volume imbalance, and we have another one here. We take the whole thing, guys. The whole thing is our PM session fair value gap. And we're going to make it a bit more yellow so that we can know that is the PM session inefficiency. So that PM session inefficiency initially got used as resistance, as you can see, but just above the PM session inefficiency, we also have the Wednesday's London session fair value gap. So price action goes lower a little bit, and it prints these relative equal lows right here, right there. We have these relative equal lows. As you can clearly see, they are relative towards each other. And shortly afterwards, it goes on higher. It resists at that London session fair value gap. Now it leaves this inefficiency right here. It resists on that London session fair value gap, leaves a new inefficiency here, and clearly price action does not want to visit that PM session inefficiency, the one that is going lower right here. So that is order flow. It is telling you where price wants to go. So it creates a market structure shift below the PM session inefficiency, right? It drops below it and comes back one more time. And as you can see, it respects the consequent enroachment of the PM session inefficiency. So that is bearish. I am seeing that in a bearish format. So I'm gonna go short if price action were to come back into that inefficiency one more time, and it's gonna find my sell limit, and I'm gonna have my stop loss at the London fair value gap low. I'm gonna have my take profit down here, where 10 a.m. So the 10 a.m. sell side liquidity would be there. Since it is a New York key level, we're going to have that key level in orange. So here is our orange key level, right? It is a New York session liquidity pool. So that is about 15 points. 15 points. That is awesome. That is awesome. So if price action were to come back into that inefficiency, it would find my big lot size going to the downside. Now I'm kidding on the big lot size. Honestly, we should always use proper risk management. So that inefficiency of Wednesday is the one that we are utilizing as an anchor point. Now, since our anchor point is a key PD array, look at it in terms of a key structure, some sort of like a resistance. And you can clearly see in the PM session, it's doing a great job at keeping price action from going higher. So since we know that we have a key level, and we also know the sell side liquidity pool is down here at the 1037. 1037 is the New York low. So we know the resistance and we know where price wants to go. So that would be the PM session setup for today, putting down the 10 a.m. sell side liquidity pool. These are the ideas that I would normally look for if I know that price action does not want to go higher. So those 1 minute time frame opening range fair value gaps, I don't get rid of them. I don't get rid of them because they are still salient as to the current affairs of step index. So I may have missed my shorting opportunity. So these are the kind of reactions that I would be looking for in those key times of the day. So I'm going to leave this trade setup running, and for the whole entire PM session, we're going to see if price action will gravitate towards the 10 a.m. sell side liquidity. So let's leave it running like this and see what happens. Well, then, there you go. This is the model that I would have utilized to partake in step index going lower to attack that 10 a.m. low at 7,630. Now, in step index, when I'm trading the PM session, I look for 10 points. Now, this is more than 10 points, right? This is more than 10 points, and I would be confident for going for more than 10 points because of that hourly inefficiency holding price together from going up. So these are the kinds of setups that I would be interested in. So until then, guys, I will see you on the next video.